All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today's main topic is going to be a very, very short one, but then we have pricing and news information after this. So, Electrum has a copycat situation going on, and it is Electrum.com, and it is either A, Bitcoin stealing malware, or B, which is not much better, a complete fraud and just a plain copycat situation, which is pretty lame considering they can't come up with their own name if that is the case. So the tweet here from Electrum is Electrum's website is electrum.org. We do not own electrum.com, and ElectrumPro is very likely Bitcoin stealing malware. Please use bitcoin.org for a list of Bitcoin wallet websites. So basically, somebody is creating the software ElectrumPro, and it is not Electrum that is making that. So it is a complete ripoff, and it could very well be just a straight-up Bitcoin stealing malware. So don't go to electrum.com to get your Electrum wallets. Go to electrum.org. So this reply here, the scam site is hosted on two separate servers. And so those are the IPs. And then this is actually Electrum Pro responding. So at electrum.com. So electrum.com is a fork of Electrum, question mark, helping improve the user experience. You can generate paper addresses directly inside our program. Our program is not malicious and is currently undergoing a security audit. You shouldn't jump to conclusions so quickly. And this one's a fork of Electrum, but using electrum.com. Sounds like something Roger Ver would support. Kinda, yeah, actually. This person saying they should get a lawyer and have it trademarked. So let's head over to Electrum Twitter. The world's most popular Bitcoin wallet. Send and receive Bitcoin instantly. Electrum is fast, secure, and easy to use. So that's a complete ripoff in itself. Electrum Pro is a complete ripoff because what is pro about it? So I never have any kind of beef with any companies that make a free software and then they make the pro version of the software. However, this is not Electrum making the pro version of the software, and it's not a subscribed kind of thing or a paid service or anything like that anyway. And then the only tweet they came about in March 2018, just poof, out of nowhere. And then Electrum Pro 4.0.2 is released. I think they just put 4.0.2 to make it sound really realistic, as if version 4 was not good enough, and now they need 0.0.2. Electrum Paper Wallet Exchange Update. And we got some fun replies here. It just says, scam, if you are Electrum Pro, why don't you use electrumpro.com or something like that? Roger, is that you? And it says, LOL, your first release is 4.0.2. Yes, you are not scammers at all. Roger, is that you? So 4.0.2 is their first release ever. That's a really good point. Why is it 4.0.2? Why not 1.0 or some kind of like beta that is less than 1.0, like 0.10 or something? So stay away from that. That is probably a good way to get all your Bitcoin stolen. So price information here. We got Litecoin at 114. It took a huge dip in the past 30 minutes or so and went from 118 to 113, just below 113 in a matter of a half an hour, 45 minutes or so. And now slowly starting to crawl back up, but everything's still remaining pretty stagnant. Bitcoin all the way down to 6,500 from 6,800 just about 45 minutes ago. So some big drops here. Some big sell-offs, and likely those sell-offs were from these big upswings here, and not really sure what is causing them. And again, there's just a lot of problems with crypto right now. A lot of the hype is gone. A lot of people got scammed. A lot of people got caught way in the teens, in the tens of thousands when they bought in. So we got big problems with crypto right now, and this isn't just a usual dip. It is a dip that has much less Google searches and much less volume on exchanges, much less exchanges going back and forth between it. So it's an interesting development. So a lot of weak hands are being shaken off. And honestly, crypto needs a bit of an update if you will. It needs some more real-world usage, where Bitcoin is a great currency, sure, and a lot of the currencies are Litecoin. You know, you could say it about a bunch of them, Verge, this, that, or the other thing. But none of them have been taken too seriously in the world. Yes, Bitcoin went sky high for a while there, and it was what everybody was talking about. But the thing is that everybody's talking about the price. Everybody's saying, oh, it's at 15,000, 16,000, 17,000. And when you say that, you're not really interested in Bitcoin, are you? You're interested in the price of Bitcoin and how much you can get for one of your Bitcoin. So you're still interested in fiat. You're not permanently interested in Bitcoin as a feature, as a currency, as a way of life, as a use, as something for future use. So a lot of people are kind of thinking that maybe sooner or later here, a lot of these currencies that are around now may end up dying off, but blockchain, however, will not. Because it is in its infancy. It's just, I like to use again, I read an article once and they used a Model T Ford reference. And we're in the Model T Ford right now. And the Model T Ford was great, but it went like 18 miles an hour. And for the most part, only a few people could have them. And there wasn't much innovation. Honestly, there wasn't a lot of good roads to ride it on. And all these things that paved the way for future cars and future technology. So we have a ways to go still. So now in news, Roger Ver and Samson Mao, passionate debates on Bitcoin scaling at Deconomy 2018. So the panel discussion, if you guys want to check this out, this was on Cointelegraph, and again, here's the title that you can find. The panel discussion, if you just open that tab, you can go right to the discussion. And well, it was interesting, and it's always fun to watch Roger Ver or Roger Ver. I don't even know how to pronounce it correctly, and I'm honestly not particularly concerned because Roger Ver is one of my least favorite people in the crypto world. And every time he talks, it's like he's really, really angry and very desperate in order to get his point across for Bitcoin Cash. If you wanted to just make a new currency, a new cryptocurrency, why didn't you just make a new cryptocurrency and call it something different with bigger blocks to... But so the reason why is pretty simple, because he needed the Bitcoin name to launch it, to fork off of, to gain the immediate market cap from forking off of it. Because anything that forks off Bitcoin automatically has a pretty big market cap. Bitcoin Gold, Bitcoin Cash, I think there's Bitcoin Diamond. And now Bitcoin Gold is definitely not a top 10, but it still has quite the market cap compared to the other thousands of currencies that are out there right now. And every time he talks, it's just really, really angry. A lot of deep anger, and he's not a very good orator. So, a panel discussion dedicated to Bitcoin scaling between Bitcoin.com, Roger Ver, and Blockstream Chief Strategy Officer Samson Mao turned into a battle of visions at the Distributed Economies Deconomy, first annual blockchain forum in Seoul. The two-day event, which took place from April 3rd to the 4th, brought together blockchain enthusiasts, entrepreneurs, and leaders in the field aiming to cover the hottest topics in the industry. The issue of Bitcoin scalability has always been a persistent and painful problem, and the first cryptocurrency due to the constant increase in the number of transactions on the chain and the inability to validate them fast enough. Giving the floor to Ver to express his opinion on Bitcoin scaling, the attendees witnessed his ardent conviction that the scaling of Bitcoin is a natural part of the cryptocurrency's blockchain and that there's no reason to avoid block size increasing if the growing adoption requires it. Ver's position is that Bitcoin has failed to become digital cash for everyday payment, such as paying for coffee. That vision, according to Ver, now lives in the ideology of Bitcoin Cash. Well, again, you could have just made you didn't have to steal the name Bitcoin, right? It's not Bitcoin if you name it Bitcoin Cash. I'm sorry, it's just not. Bitcoin is Bitcoin, and you could have just made any other currency. Any other currency. You could have named it anything you wanted. Roger Ver coin. And you could have put the same size, same size blocks in it, made it exactly like Bitcoin, and it wouldn't have been Bitcoin, and it wouldn't have this trouble right now. So, but would that have taken off like Bitcoin Cash would? No, because it doesn't have Bitcoin in the name. Samson Mao, to the contrary, said that an over-the-edge increase of blocks is not an ultimate solution, as it could lead to increasing the chain weight. Mao believes that there should be a second-layer technology integrated where everything is cryptographically bound to the main chain. According to Mao, this would enable keeping the Bitcoin blockchain compact enough to synchronize transactions with nodes for a relatively small period of time. He also sees a solution in the usage of Bitcoin coupling with Lightning. Mao said, I think scaling Bitcoin, we have to take into consideration the computer science aspect of it. We can't just make things up. We actually have to look at the code, and we have to follow the consensus rule. If you look at what Bitcoin Core has been doing, is that they've been scaling all along so that everything is backwards compatible. So Ver parried with an argument that the intention behind Bitcoin Core might be positive. However, the empirical evidence shows that the effects were negative, incredibly damaging to Bitcoin, and caused a negative merchant adoption around the world. Ver claimed that it's easier for merchants to migrate to altcoins rather than to add Lightning support to the existing Bitcoin payment option because it would be expensive and unreliable. Bitcoin Core, so Ver stated that Bitcoin Core is having a negative merchant adoption worldwide. Bitcoin Cash is having positive merchant adoption worldwide. So even if Samson and the Blockstream and Bitcoin Core supporters have the absolute best intentions in their heart, we have the empirical evidence to show that the effects were negative, incredibly damaging to Bitcoin. Let's judge things by their effect and the results, not the intent of the people that were putting it together. So in a way, I do kind of have to agree that Bitcoin is, does need to do something very quickly. And of course there is Lightning Network and there are ongoing solutions being created. Because when Bitcoin was at nearly 20,000, the fees were absolutely outrageous. So if you wanted to buy a $5 cup of coffee, you're gonna spend like $25 because the fees were so outrageous, and it would take you like 2 hours to confirm the block. But I still don't agree with the fact that you name something Bitcoin Cash and basically just completely rip it off and say, yeah, no, this is Bitcoin. No, it's not. You just made something else. And, like no matter what, it's still not Bitcoin. You could have just made any other currency. You only ripped off the name because you needed its notoriety. And that just needs to be admitted. I think I would actually like Roger Ver a lot more if he just admitted that he needed to rip off Bitcoin's name in order to push his own agenda, his own Bitcoin Cash. Not that he wanted to fix Bitcoin itself. If he wanted to fix Bitcoin itself, he would have joined the team, or he would be working towards making Bitcoin Core better. No, he wants Bitcoin Cash because of all the money that he would be making and all the money that Bitmain makes by only accepting Bitcoin Cash, that sort of thing. He has a lot of vested interest in it, and that's that's okay, but just at least admit it. Just come out and admit it that you're a shill, that you're just looking to make money, and that honesty would at least be a little bit would be taken positively in my heart. So Ver's tone towards Mao's Bitcoin core team became accusatory. Oh my. Saying that they've shattered the Bitcoin ecosystem into 1,001 different altcoins and delayed the adoption of cryptocurrencies around the world by years. Mao stated that Bitcoin can be used by everybody, but technology takes time to mature, including Lightning. This will result, according to Mao, in the ability to make transactions with Bitcoin by anybody, even on low-grade devices. With a wider implementation of Lightning, transaction fees will inevitably change. Like the weather, it can be hot one day, cooler the next. So the passionate debate gives rise to a sarcastic reaction from the community, which has been absorbedly discussing the way Roger and Samson behaved on stage, rather than addressing the topic of Bitcoin scalability. So one user said, does Bitcoin Core have any spokesperson who can articulate the Bitcoin value proposition anymore? You may not like Roger, but he can speak to the commercial and economic aspects of Bitcoin far better than anyone I've seen from the Blockstream crew. Kind of a point there. Like, where are the Bitcoin spokespeople? Where are they? It doesn't make any sense. The majority of people are Bitcoin Core supporters. It's just pretty much fact. There's a ton of, the volume itself speaks for it. The price speaks for it. The people talking about it, people buying it speaks for it. I've seen some, posts of, like people asking the question, do you support Bitcoin Cash or Bitcoin Core? And Bitcoin Core beats it out by a mile every time. So where is everybody? Where are the Bitcoin spokespeople other than this Mao guy, who, kind of did all right with doing it, but they're just not. I don't think they're articulating it in a way that that a lot of Bitcoin Core supporters understand it. They're like, oh yeah, Lightning. And they're like, well, okay, so like what else? Like what else you got? And that's about it. So another user said Samson didn't answer anything. He didn't clarify anything. Just sitting there like he's some cool guy with an ace up his sleeve, but nothing. Another YouTuber said, Roger Ver sounds like a Bitcoin Cash commercial. He's just embarrassing himself now. I kind of agree. So Roger appears so agitated and angry all the time. I don't mind listening to differing opinions, but he makes it rather unpleasant to do so. And then another person said, did you see Mao's body language, a constant finger tapping and playing with the water bottle? He looked so nervous he was about to visit the dentist for root canal surgery. So kind of makes a lot of sense. You know, there's a war going on, if you will. So next one says, Wall Street Bitcoin bull Tom Lee predicts massive outflow of crypto before tax day. So Runstrat's Tom Lee had predicted a massive outflow of cryptocurrency to fiat in the lead up to tax day in the U.S. So CNBC reports on April 5th. In a Thursday report, Lee notes that since U.S. households owe an estimated $25 billion in capital gains due to their crypto holdings, and crypto exchanges also owe income taxes, both households and exchange will be selling their crypto to pay the U.S. government. We believe there is a selling pressure by crypto exchanges who are subject to income tax in the U.S. jurisdictions. Many exchanges have net income in 2017 of more than $1 billion and keep working capital in not U.S. dollars. Hence, to meet these tax liabilities, are selling Bitcoin and Ethereum and such. So according to Lee, historical estimates are each $1 of U.S. dollar outflow is $20 to $25 impact on crypto market value. Crypto markets reported near 50% losses across the first quarter of 2018, marking Bitcoin and Ethereum's worst first quarter performances in the history of the coins. However, anyone that capitalized on the crypto market spike in 2017 saw the Bitcoin's price rise to 20,000 would need to pay capital gains tax on their earnings. Lee's Bitcoin Misery Index, created in mid-March to show how miserable Bitcoin holders are based on the current price, shows that the crypto holders are currently feeling the misery. So the reason why we haven't seen this kind of tax issues in crypto before is because it wasn't until, I would say, the fourth quarter or so of 2017 was when all of the tax issues were being brought up with cryptocurrency and how the IRS was going to start really cracking down on cryptocurrency, and many governments worldwide were going to start taxing and things like that. So years back, we never really saw this to this degree. Regulatory headlines risk is still substantial and sentiments remain awful as measured by our Bitcoin Misery Index, which is still reading misery. Lee includes that ultimately we expect Bitcoin to find footing after April 17th, tax day. Lee mostly predicted that Bitcoin will hit 91,000 by March 2020 based on Bitcoin's performance after past market dips in January of this year when Bitcoin's price was around 9,000. Lee told that Bitcoin would hit 25,000 by the end of 2018 instead of by 2022 he had previously predicted. So there you go. So Arizona blockchain bill signed into state law. So I'm an Arizonite at the moment. Initially was from Pennsylvania for like 29, 30 years of my life. And now I'm in Arizona, and it's all great, except for the unbelievable heat. 120 degrees in the summer, believe me, people, is no joke. You feel that. And just because it's a dry heat, I heard one person say one time, it was one of my favorite quotes ever about heat. And he said, oh, dry heat isn't that bad. Well, I'll tell you what else is dry heat. An oven. Makes sense. Crank up your oven to a couple hundred degrees and stick your head in there. That's a dry heat. But is it really, is it still hot? Yeah, it's still really hot. So a bill allowing corporations to hold and share data on distributed ledger was officially signed in Arizona state law by Governor Doug Ducey. Wow, what a name, Doug Ducey. Holy cow. According to a legislation tracker on April 3rd, the Arizona House of Representatives passed some odd bill. Ooh, got hiccups. With 56 in favor, 3 against, and 1 abstention. The Arizona State Senate proceeded to pass the bill unanimously. The bill was first introduced as an amendment to the Arizona Revised Statutes, one of 3 bills aiming to open the door for emerging technologies in Arizona. So they're both awaiting a third reading in the Arizona Senate. The former would prohibit towns from restricting cryptocurrency mining in residences, while the latter aims to address securities and crowdfunding, recognize a virtual coin as a digital representation of value, and authorize its function as a medium of exchange and digital trading. So really good steps, in my opinion. This is the kind of regulation that's good regulation. So Winninger's, although it's more of just like the government saying, no, this is okay, when it was really okay before it was ever said that it was okay, kind of thing. So take it with a grain of salt. Double-edged sword, I guess. Winning measures emerge amid a backdrop of robust regulatory moves by the state recognizing the limit applications of blockchain technology. As Cointelegraph reported in March, the Arizona Senate would allow state residents to pay their taxes in Bitcoin. So not too bad. Arizona moving forward. One of the most progressive crypto states so far. So Coinbase to let users withdraw funds from Bitcoin forks. So cryptocurrency startup Coinbase said Thursday that in the coming months it will let customers withdraw funds from resulting from forks of the Bitcoin network. In a blog post, the started announcement was made withdrawal support for the forks, though the post did not announce the firm timeline. This change will allow customers to more easily withdraw assets associated with Bitcoin forks across all Coinbase products. So as always, we look at technical, operational, legal considerations when deciding which Bitcoin fork assets to support. We'll always state on our website which particular assets are supported. So that being said, Coinbase noted it was not announcing support for any specific assets at this time. In the announcement, Coinbase explained that it will work to support future Bitcoin forks on its Coinbase custody product, adding that this platform will likely support more forked assets than GDAX or Coinbase for the foreseeable future. Coinbase, its digital assets exchange, will allow customers to withdraw the Bitcoin forks, but not trade them. Similarly, Coinbase's basic platform will also allow customers to withdraw the forked assets, but without enabling trades. Further, the startup noted that an asset may be added to GDAX in the future without being added to Coinbase. So this just means that Coinbase is finally getting on the fact that it has long since abandoned any kind of forks and never gave anybody their forked coin. And now they're like, hey, look at us. We're allowing you to get your forks. Well, why thanks, Coinbase? You're only like a year late, basically. But okay. So U.S. crypto tax policy isn't just crazy, it's cruel. So an incoherent policy here, we'll just kind of skip around, and says the breakthrough distributed ledger technology known as a blockchain is being given the Mad Hatter treatment by the federal government. The U.S. Commodity Futures Trading Commission is eyeing virtual currency as a commodity. The SEC is beginning to treat certain tokens as a security. The U.S. Treasury Department Financial Crimes Enforcement Network, holy crap, has stated that certain activities involving convertible virtual currency constitute money transmission. Oh, man, the IRS does not mess around with their long terms. The IRS treats convertible virtual currency as property. Commodity, security, currency, property. 4 different inconsistent categories for the same thing. What are you talking about? So it does not appear that any of these actions already taken by the IRS to address virtual currency tax non-compliance were coordinated to ensure that the IRS maintains a strategic approach to tax implications of virtual currencies. More jargon. Blah, blah, blah. What are you talking about? They need to make this a lot easier. Plain and simple. I know doing your taxes is never really particularly easy. Although TurboTax makes it pretty easy. Wish I could get... come on, TurboTax, where's my money? I've said it before. I mentioned your name a couple times. Come on, TurboTax. For example, if a taxpayer uses a portion of a Bitcoin to buy a cup of coffee each day for 1 week, he or she will have to determine what portion of the Bitcoin was used to make the purchase based on the daily exchange rate. Convert it into US dollars and keep a record of each transaction so that the gain or loss from his or her virtual currency property can be properly reported. The IRS property guidance does not provide taxpayers with guidance on what records should be kept and or how the records should be maintained due to the potential complexity of reporting otherwise simple retail purchase transactions related to virtual currencies. Further guidance is needed to help taxpayers voluntarily comply with their tax obligations. So, yeah, I don't really want to read the whole article because taxes, screw taxes. But I just like to read it once in a while to just to show how ridiculous the IRS is in talking about their taxes. Like, just ridiculous. Like, what are you even talking about? You're calling it a security, a property, a commodity. What is it? We need to know. Bunch of nonsense. So, Bitcoin stuck below 7,000 as crypto struggles with headwinds. So Bitcoin prices fluctuated south of 7,000 today, trading below this level as the broader digital currency space faces numerous headwinds. Cryptocurrency fell to as little as 65.83 earlier, according to Coinbase Bitcoin Price Index. The digital asset bounced back later to 69. Additional BPI figures show. So investing in cryptocurrencies is highly speculative, yada yada. So Bitcoin's recent decline. Bitcoin has fallen more than 60% from the all-time high it reached in December when it climbed to nearly 20,000. Digital currencies experienced both sharp declines and notable recoveries in that time, falling below 6,000 in early February and then climbing its way to almost 12,000 later the month. The cryptocurrency suffered additional volatility since then, fluctuating between 6,500 and 7,500 for much of the week. When explaining why Bitcoin experienced weakness lately, analysts pointed to several factors. So regulatory uncertainty. So numerous market observers cited uncertainty surrounding cryptocurrency's regulatory landscape as a significant driver of Bitcoin's recent price movements. James Song, founder of CEO and blockchain startup Exilcoin, spoke to these developments, stating that there has been a lot of selling driven by uncertainty around Bitcoin's regulatory environment. And Tim Enneking, managing director of crypto asset management, emphasized that while recent U.S. regulatory developments have placed downward pressure on Bitcoin, other nations, for example Switzerland, have provided more bullish regulatory updates. Should the broader cryptocurrency market achieve greater clarity in terms of regulation, it could help draw institutional investors back into digital assets. So, however, Cohen emphasized that this isn't all that is needed for these financial institutions to get involved with cryptocurrency. So, fund hopes. In addition, there must be hope that regulators approve an exchange-traded fund, an ETF, granting exposure to Bitcoin, he stated. Wall Street is waiting in the wings until they're confident, if not certain, that more traditional vehicles will be made available, such as an ETF. Seeing as all these attempts at receiving approval for Bitcoin's ETFs have failed, it is highly uncertain that if and when such a security will ever exist. So natural market reaction. While Bitcoin's price has been trading far below the all-time high, nearly 20,000 lately, the cryptocurrency experienced a normal fallback and consolidation after the sharp gains it experienced in 2017. Last year, Bitcoin rose from less than 1,000 to 19,700 in December, according to the Coinbase BPI. So we went up just about 20 grand in a year. So that's pretty crazy. The total value of the broader digital currency market also rose sharply, climbing from less than 20 billion to more than 600 billion during 2017. So as you can see there, that that 1,000 to nearly 20,000 brought in a lot of weak hands, a lot of people that had, I don't want to say no business in investing, but a lot of people that never really gave it too much of a thought, and that as soon as they see red, they sell, and then as soon as they see green, they buy, and that's completely the opposite. Completely the opposite. You need to be doing it the other way around. Red, you buy. Green, you sell. You don't buy on green. You buy on red. Just throwing that out there. It's very easy. It's kind of like the opposite of a stop sign. On red, you go. On green, you stop. Sell. So tax season, after cryptocurrencies experienced these robust increases, many market participants had to sell some of their holdings simply to keep up with their tax liabilities, said analysts. This activity is placing huge downward pressure on gains. And then predicting a bottom as Bitcoin continues to trade below its all-time high, and it can put in a bottom around 6,000. Koyen singled out the exact same price level, stating, considering the battering that Bitcoin has faced in the past few weeks, finding support at 6,000 is actually impressive. Some people are eyeing 3,000 as the eventual bottom. I'm not so sure. I think we'll go sideways in this neighborhood, plus, that is, plus or minus 1,000 before picking it up again. So again, I have a lot of reasons that Bitcoin is going down. I've made several videos on why Bitcoin is going down, which I provide tons of news articles and different things that have brought it down. So another thing is that earlier today, there was this big hype about Coinbase releasing some kind of information on fast money on CNBC. So what it turned out to be was nothing particularly special. It was actually quite hype and not that great. So some people were expecting that they were going to say that maybe they were going to release a new coin or something special like that, but really it wasn't. All they're doing is releasing an early stage venture fund in which that Coinbase can basically be venture capitalists. They're going to fund companies that they like and that they want to get into, and they can even fund direct competition, so other exchanges that might be in direct competition with them. And you might think, like, why would they want to do that? Well, to make money, because they're going to loan them, millions of dollars to start up their project, and then, get all that money back plus some. So Coinbase at the moment is not going to be beat anytime soon. They're at the absolute, pretty much the king of at least novice buyers who initially buy in. And I'm not saying that GDAX itself is necessarily a novice platform. It is probably the easiest one for novice to get into, but it does function just fine. and has free limit and buy orders, so that's why I like it the best. It's just easy, just even small just orders. You never have to pay for them. Just boom, 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 just trade, 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 and you never have to worry about fees. Is it the biggest exchange? No, I would say probably Binance, maybe Bittrex is the biggest exchange. I think Binance. But Coinbase, in terms of its scope, I think it made the most money the way that they do things. Like if you buy coin directly on Coinbase, you're paying a fee. Not only are you paying a fee, but you also pay a convenience fee. So if Litecoin is at 110 and you go to buy with your debit card, you're actually going to pay like 111 or 112 for the coin instead, even though it's at 110 right now, plus the fee for your debit card. So they make a lot of money, trust me. They're doing just fine. So they're creating a venture fund, and honestly, it was quite disappointing because that doesn't really help the average user. That doesn't put Ripple on their platform, doesn't put Verge on their platform or any other coin like that. So nothing too special just yet. But either way, keep on hodling, guys. Keep on buying. It's a great time to buy. Buy in the red, sell in the green. Don't buy in the green. I mean, yeah, sure, maybe if it's going up a little bit, but don't buy at the top of the green. You're crazy if you do that. And it's not how you do that. But I hope you guys enjoyed this, and I'll see you guys next time.